All right, good morning. It is Monday, January the 13th, 2025. Joined here with, we brought Tyson Strachan in to the mix to help me with the video today. Strax, as we call him in the office here, but nice to be back in the office. Obviously we had, some nice time. My family did up in Minnesota, seeing family, and then, flew Caitlin and the kids back home, and then I got right back on the road to see some out of state families that we help, and Strax, you kind of similar.
Yeah, very similar to you. Obviously nice to get away for Christmas, and went to the in-laws in Florida, which is not a bad place to be for that time of year. And then I've been traveling a bit to start the year, so nice to be back and have a full week in the office. Yeah, so last week we got the Q1 newsletters out, so if you haven't received that already, I would expect you to get that this week. If for some reason it doesn't, let us know.
Yep, and on the Q1 newsletter, we it's a fun time in the office for us, just as the nerds that we are, kind of putting together our 1099 summary letter. We kind of talk about on the back page of that. All right, so as well as required minimum distribution, so RMDs. If you have a required minimum distribution for 2025, you'll be getting that letter, as well as the 1099 letter. Be on the lookout for those in the coming weeks here. Outside of that, it was an interesting week in markets last week because we received a lot of positive economic data kind of across the board, which can be a little bit difficult in terms of equity markets. But you want to touch on a couple of those?
Yeah, so obviously, like you said, very positive. Jobs, 256,000 new jobs, which is way above estimates. Unemployment numbers dropped to 3.9%. And then we saw the Q4 GDP growth up 2.7%.
Yeah, and we're just kind of in that phase of the economic cycle where if the economic data we're receiving becomes too strong, what that does is as far as the Federal Reserve is concerned, they're not going to cut rates as much, right? Because rates are still pretty high even after a few cuts, but the market was expecting plenty more rate cuts throughout 2025. All right, so what's happened and a lot last week is this positive economic data, so it surprises to the upside, which means the expectation for future rate cuts has gone way down, right? So now the market is only expecting one rate cut in 2025. You saw yields increase sharply. Okay, so now the 10-year Treasury this morning at 4.76%, which is the highest it's been since really the tail end of 2023. Okay, so high yields. Inflation expectations have also increased from, call it 2.8% up to 3.3%. All right, and so again, if you take a step back, we talk about this a lot. What are stock prices? Right, well, you as a shareholder, you have a fractional claim to the profits of businesses. All right, and so why you see equity markets start to pull back is because if you think about what's happening, now the expectation is interest rates are going to be a little bit higher for longer, which means those boards, the boardrooms of the biggest companies in the world, they're saying, oh gosh, maybe that project we were thinking about investing at, that maybe that is profitable at a 3% rate, cost of capital. At 5% it's not, so we can't invest in that project at this time. And therefore, as a whole, the expectation would be equity markets probably have to pull back a touch, particularly the pockets of the market that are already at higher valuations, right? So that's why you saw last week the NASDAQ pull back the furthest. Again, it all makes a lot of sense, especially given how strong markets have been the last couple years.
Right. So. And then this week we're going to see more inflation data. We'll see the retail sales numbers, and then we'll get some housing data as well.
Yeah, that'll be really interesting, particularly the inflation, right? So consumer price index, producer price index. We get both of those readings this week. All fun stuff. So questions, comments, concerns, please don't hesitate to reach out to our team. We always love hearing from everyone, and we'll talk to you soon. Thanks.